All right, now we're going to bring in Phillip Mitchell. And as a disclaimer, Kroon Mitchell is my CPA firm in Grand Rapids. And so I can highly recommend him. I've been working with him for years. And so I mentioned to Amy that I wanted to get her on the show, and she recommended Phil. And then I looked at Phil's bio. You've done a lot of stuff on various news shows talking about what I want to talk about today, which is it's the end of the year. We've only got a couple of weeks left. What can businesses do to minimize their tax exposure that won't raise any audit flags, right?
Minor details, right?
Yes.
Yeah. Hi, Mike and Matt. Good to see you guys. I think it is this time of year. It's funny, as you're talking about this exact topic, I feel like I was just on the phone about a half hour earlier asking, someone was asking me this exact question. What can we do? We have very little time between now and the end of the year. What can we do to help improve our income and actually try to lower maybe tax liability? That's what's probably driving it for most people. I'm not sure if that's what you guys are hearing from some of your business and small business clients, but essentially what we've seen is people had a really all over the place income the last couple of years. So maybe in 2020 it was good or bad, and then this year was great. Some it could be not as good, and how you really want to think about it from a tax and investment perspective is how do you smooth out these ups and downs? Because if you have a really great year in 2021, you know what our first recommendation? You want to lower that taxable income if you can. And one of the easy routes that we have talked about is you just create a retirement account. Small business owners, for example, there's still plenty of time to set one up. What happens is as each week and day goes by, though, you're running out of options. But when you open up these accounts, you have a chance to make pretty substantial contributions if it makes sense for your situation. And ultimately what it does is it lowers taxable income, potentially by whatever amount you can contribute. So that's a pretty easy, low-hanging, piece that's out there for some people. And that's a pretty common strategy this time of year.
Okay, Matt.
So how should people treat the stimulus money that we've gotten? What's the tax treatment both for individuals and stimulus checks and for businesses if they received Paycheck Protection Program funding?
Yeah, so essentially you really got two different areas here. When you're talking about the stimulus going to individuals, that's not going to be taxable. Okay. Now, depending on how the business got funds, some portion could be taxable, some portion could not be. We're seeing a lot that are actually getting it waived. So it's really going to depend on what they actually use those funds for. And so that's going to be, to determine. But, Matt, it's interesting you bring that up. This is what we saw so many people seek out info last year is there was stimulus. There was a variety of different things, unemployment compensation, a variety of things that maybe people didn't have in the past. So all of a sudden we had a lot of people asking questions. And again, I'm not sure if you guys encountered this. We saw a lot more stress than ever before to do a tax return, including at our own company, because the more questions you have right in a tight window, it makes it a little bit more hectic. That's for sure.
Yeah, I was one of those, not so much this year, but the previous year, I'd never drawn unemployment before. And because of the special provisions for small companies like mine, I was able to do so. So I know not all of that is taxable, but some of that's taxable. I guess I'm still confused. How can you sort that out?
Well, the reason it's confusing is everyone's in a drastically different situation. It's so tough for people like myself as a CPA, doesn't really talk about this, is it really depends on 10 other factors that we have for the individual. Ultimately, if you look at it big picture for unemployment last year, if people had low enough income, it was excluded. The problem is for most people, it was excluded after many people already filed their returns.
Yeah.
So you get one of those variables. So we're still ironing that out for some people because, we were told a variety of things from the IRS, including the state of when, they will correct it. Maybe we should go back and correct it. So it's the real challenge is too is it was more difficult than ever before in the last 24 months to get a hold of someone at the state of Michigan and the IRS. And they would admit it as much as there were so many requests behind. And it could be something as simple, where's my refund? We've heard this by people a lot. And there is accommodations through the IRS webpage where you can go in and say, where's my refund? But the problem is it could be pending out there for quite a while. And so the people who are most in need, it's a tough scenario when the check's in the mail, and it literally was, you know.
So what looks to be ahead in terms of taxation? I know there are provisions in the still pending Build Back Better plan. Talk about those a little bit. What do you see in the road ahead for 22?
Yeah, I think the toughest part with that is they have thrown 1,000 different items out there so far, and we don't have a law passed. So it's really tough to speculate when, you know, it's changed so much. But from Cliff Notes version, the way we sort of see it is, it sounded like it was going to hit a lot of people. And I think it's getting smaller and smaller how much it'll hit. But we don't know that until final conclusions and, you know, laws are passed and written. I do think one of the things that's being talked about that probably will happen is maybe on things like the Bitcoin is a little bit more regulation. And for anyone who's a Bitcoin fan, I would say you want more regulation. That's a way for your industry to become more and more mature, to say, hey, this is the requirement for most investable securities, is you have rules and requirements on reporting, disclosures, all of those different things. As much as you might want something different, there's a reason they came up with these laws years ago, is because there was quite a lot of fraud. That's how you created so many of these regulatory organizations. And so that's really, you know, I think what you want. But the real question is, how much info do they want? They've talked about throwing out needing information as low as $600 on a bank account. Well, will that occur or go through? You know, that one sounds maybe a little less likely, but those are the things you start to worry about is, from a small business perspective, what new rules and regulations are you requiring for me? Because I'm guessing if you ask Mike, he might say, hey, there's a lot of work to do to run a business that's not even working on the business. It's just to stay in compliance and from tax and all of those different things, you know?
Yeah, and certainly one of the ones that I'm familiar with, although I don't receive it, but some of my relatives do, is the child care tax credit. Now, that's not taxable, is it?
Okay, so what's interesting about the child credit, again, this is why it's so tough to talk when a general sense. I can talk with two different people, and one makes higher income and one makes lower. They are going to be in drastically different scenarios. Okay, so with the stimulus, if you were mailed a stimulus, you got to keep it, whether it turned out you did not qualify when you file your tax returns or not. You got to keep that amount. The child tax credit, you do not. And so what we found is some of our higher income clients, we told them you should tell them you do not want to accept that because you don't think you would qualify. Hence, you'd have to pay it back at the tax filing season. But, you know, for most people, average income, this is probably not going to necessarily be a problem, and it's not considered income. The question is, as you start to phase out, it has to be repaid. That's where, you know, one thing we learned from taxes is it's the surprise that bothers people more than anything else, right? You didn't realize you had a $5,000 liability and you're caught off guard, and maybe even in a small business setting. Do you have that, you know, easily accessible at this time, right? And so here we are maybe talking about some year-end strategies. Imagine if you set up a retirement account or you do something else, and then it turns out this liability pops up, right? That sort of offset your planning pretty good.
Matt?
I would imagine the same goes for other tax credits that you can claim that phase out at higher income. I know there's a student loan interest tax credit as well, right?
Yeah, and that's where you know, I think probably the CPA, while the software and running through a CPA is so important than ever before, is because you really got to dig into the details. It could be an adjusted gross income versus a taxable income number. Well, these are drastically different things that can, you know, cause you to phase out. But, you know, further down that path, when we were thinking about what you can do, you know, at year end, you know, obviously you have those retirement accounts, but you have something like a health savings account. If they're a small practitioner or individual person, they still have time for that. And that's the key to understanding is what do you have time? What's sort of the deadline? But one of the other things I was sort of brainstorming when we thought about this, that what could be helpful before year end, it could be even a charitable contribution. That may be off the radar, but there are great organizations that need a lot of help. And there's an incentive this year that you can write off $600 for a married couple, $300 for an individual. And this is regardless if you itemize. And what most people may or may not realize, it's over 90% of the population does not itemize anymore. So we take what's called a standard deduction. It makes it a little bit more simple. From my perspective, I think that makes a lot of sense. You know how many times in the past people are digging up Goodwill receipts and digging in this for just a couple dollars instead of trying to figure out the big picture of their company? That's what you should be really thinking about. What's the profitability of your company? What's the revenue? What are the inflation going forward? And how are you positioning for that? That should be the focus. And so with the higher that standard deduction, it makes less of these small write-offs relevant for most people.
And then finally, as we come down towards the end, another popular thing a lot of companies do is buy equipment or put money into something along those lines right at the end of the year. Is that a good idea?
Yeah, I mean, it's all going to depend on that personal situation for the person. But what I'd really tell you is it depends on what piece of equipment. I would really want to coordinate with the CPA to say, does it make sense, to try to have more of it written off in that year versus spread out. So what people may or may not get is sometimes the more expensive items, you can't necessarily write off the whole thing in 1 year, even though you wrote the check for it. Okay. Right. So when we combine it in today's world for strategy, maybe you would prefer to, this is not as good a year and next year will be a better year now that you're getting that new piece of machinery up and running and maybe more volumes occurring. Well, it'd be better to take some of that expense when that income occurs. And that's sort of the point of depreciation to begin with, is to better line up the revenue with the expenses, right? But one thing what I'd tell you though, Mike, on that regard, is we try to discourage people from buying something for sake of getting a write-off. You want to make sure it really helps your business going forward. And then looking at the variety of options you have for potential write-offs, right? Even something like a retirement account, you're going to need that down the road, regardless of what you do. You're not buying a new piece of equipment for just sake of using it, and then it's really not used very much.
Okay. All right. So, Phil, let's talk about how folks can reach out to Kroon and Mitchell, website, email addresses, whatever, if they need to get further information or they want to reach you directly.
Yeah, I'd say the best way is you can just type it in Google, Kroon and Mitchell, Kroon with a K, and write integrated tax and investments, and you'll see us come up at the top. And whether it's me or my wife, Amy, or my father-in-law, Art, any of us could sort of jump in and help you, and feel free through the website. You can contact us and get an email directly to us. But thanks for having us on today.